Hello, guys. How we doing tonight? Seems like the music bot is always down on the big events. I'm doing great, doing great. Hopefully, you guys are all doing great as well. Definitely has been a big weekend. One of my friends is pregnant, about to have a baby, and it's a little bit of a shock here. Being 21, she is the first. So just got a little bit of a life hit, I guess. A lot of reflection added there. But it was pretty cool, I have to say. Pretty excited to get into this monthly statistical outlooks. You guys know how much I love these, right? Looking at data, looking at how we can bring in statistical approaches to our day-to-day trading and also do longer term perspectives, right? This is something that when I started, I had no clue if it worked or not, right? And we tested it. How? Well, how long have I been doing these? I mean, a while for sure. Definitely gonna give you guys a better assessment, but there is a playlist on YouTube with all our monthly statistical outlooks, and we've had some very amazing consistency going into them, clearly showcasing the value of adding statistics to long-term analysis of trending markets, right? It's important to point out I'm looking at the indices futures. So in trending markets, statistics can be very, very powerful, but they won't be the best at planning long-term reversals, in my opinion. But let's get right into it, right? Enough rambling. We can just get right into our seasonality analysis first. Now, of course, for December, it is not the most volatile of months overall. What we tend to see is an end of the year rally. So we can look at this purple line right here, which showcases all-time seasonality, and we can see how we tend to see just a slow grind up going into the end of the year. If we look at the more recent data points, right, you can see the 5-year and the 10-year here with green and orange. We can see a lot more back and forth, a lot more volatility with some lows coming in near the midpoint of December, right, just before Christmas. So we tend to see some upcoming volatility just in the last 5 and 10 years, but overall 15-year and all-time seasonal averages tell us that we should see a slow grind up, and we're seeing pretty much the same thing on ES, but with divergence being formed, with ES even in all-time seasonality forming a low near the midpoint. I love looking at these seasonal chart. They can give you a very nice idea of what to expect on a month like this. Of course, there's a lot more that goes into it, right? But overall, this is what I'm going to be looking to expect for the month. I'm going to be looking for slow grind up, and I'm going to be careful once we get to that middle of the month for a potential move down, or perhaps even just for potential low to be formed. Now, before we dive into, let me just switch over to chart, but before we dive into the ranges analysis and all of that, let's go directly on our chart and see specifically what we are expecting, right? So I'll go in replay mode and fully hide this 1st of December here so that when we bring our candle ranges analysis, we can go look at the previous monthly high and lows. As we can see on NASDAQ, what did we do in the month of November? We went to go target the October lows. Of course, statistically speaking, this was a very low probability of being met, right, overall. But we saw a very nice retracement lower, honestly, just a trending retracement lower. Some pretty aggressive pullbacks in there too, but definitely we reached our main objective. And now, as we can see, we were starting to form the signs of a reversal. But overall, what do we know from November? That it went and targeted previous monthly lows. Now, why did I want us to take a second and go look at that before going back to Rice Statistics? If it can pop up, I want to switch my screen over. There we go. Because once we head over to the ranges analysis, what we are going to do is adjust to the current market conditions. Now, what do I mean by that? Well, I could just look at any month of December, have all my statistics for the month of December overall, and then I could go look at the extremes, and then I can go look at the raids and establish a very clear plan with that. But what did we see in the previous month? Something the statistics told us was less likely to happen. So now that I understand that we are out of sample, What does that mean in statistics? Well, it's very straightforward if we're being honest. It just means that, hey, my statistics were wrong for that month, which means that we're doing something different. And I want to adjust and see, hey, did that happen in the past? Especially with a month like December, where, as we can see here, in the last 20 years, we've had 50-50. Sometimes we're bearish, sometimes we're bullish. So how can I get a clear grasp, a clear understanding? Well, I'll use this little feature here that we have to filter using the previous time period. So we're going to go here and we're going to say the previous month. I don't even know. Let me go back to trading view real quick. I just want to see. I think that we closed bearish, but I do want to confirm. Yes, so it's okay that you guys don't see my chart right now. I just wanted to look at the monthly open. Yes, so we did close bearish. You guys should now see right statistics again. So we closed bearish. All right, is that going to help me? Well, there were a total of 5 months that were of 5 Decembers after a bearish November. So 25% sample out of the 20 months we had access to in the last 20 years. It only happened 5 times. Okay. And what does that tell me? Well, it tells me that most often we're going to see a consolidation month within the previous month's range, right? There's an 80% chance we do not have a previous low rate and an 80% chance we don't have a previous high rate. So already I'm going to be anticipating that we're going to be more within that average of the 5 to 10 years that we just saw in seasonality of, hey, we're going to go doing a lot of back and forth this month. And that doesn't mean it's going to be bad market conditions, but we have to be prepared for that effect because I'm not going to let runners run past key daily points if I understand that there's a high likelihood that we won't see much expansion and we'll see a lot of back and forth this month. Or if we forget about the direction and refer specifically to how, hey, we had a low rate, right? So how many times was there a December where November hit previous month's low? That's what we see now. And we see that, hey, we do have a tendency to form a lot of reversals. Now, of course, once we go back to bearish here, we'll see it only happened 3 times. But does 3 times gives us enough of a data set to look at key points for statistical reference? Not really. Is it bad? Not necessarily, right? We're looking at such a high time frame right now that even 3 months can give us a clear insight. But that's where I like to focus on only specific things. Understand that, hey, if November took out the previous month's low, there is still a decent likelihood that December will hit previous high rate, which means we'll see a new all-time high. So I can keep with my bullish thesis that I saw in the chart, even though we are in out of sample areas. As per extremes, as we can see, very, very spread out. What does that tell us? Even if we remove the filter from the previous entry, very, very spread out extremes, which means what? Well, there's no statistical edge on a month like this and trying to understand when the high and low of the month will be formed, right? We'll have a run. Do we know when that run is going to happen? Well, it depends on multiple factors, and statistics tell us that it can be at any point in time. It's also important to point out. For rates, though, it's a little different, right? Because we see that, hey, the highest likelihood of getting a high rate is going to be during week 1 and a little bit during week 2, happen once in week 3. But what does that tell me? If after week 1 we are far away from the high rate, likelihood is we are not going to go for the high rate. And what we see from the low rate is, hey, even though we have a very low likelihood of reaching it, if we are to reach it, we tend to go for it later in the month or at the midpoint of the month. And that confirms what we saw in the seasonal analysis, where we saw December 19, 20, very big pullback to the downside. That is how I use statistics on a higher time frame perspective. I don't like to go further than that point. I actually just noticed that I think the recording did not get my chart, but that doesn't matter. All right, that's why you guys are here live. You're getting the actual footage the whole way. So sorry for the people on YouTube, but starting now you will be able to see the chart. Unfortunate on that regard. But what do we see, right? What does this tell us? Well, not much, right? We know that we have a low likelihood of reaching the high, a low likelihood of reaching the low. Okay, we should trade within this range. This still gives us a huge range to trade within, right? We see a 10% range that we saw from the month of November. It was a very aggressive month. So, okay, December should give us what? Consolidation. That's the truth. We're going to trade within these levels. Every time we take out a key objective, let's say, for example, right now we're heading to this objective. Well, I'm not going to expect us to just run through it like this. I'm going to see us take out this objective and then go for a retracement, and then perhaps then I can look at that continuation. That is what you have to expect in cases like these. What month was it? In August, yes. This summer, how do you anticipate this? Well, we could anticipate that the month of August was going to be consolidation. That's actually what we said we were going to be looking for. So what do we notice? Well, when we take out a key objective, we tend to see a retracement. And then that retracement will continue until when? Until we reach a key objective. This is what I'm going to be looking for this month. So I'm going to be very conservative with my long-term objectives, and I'm going to be looking for consolidation, right? As long as you know what to expect, there's no reason you should not profit, even if it is under what people may call worse trading conditions. I'm still going to be expecting an end of the year rally on the indices, especially if you've been following up with some more fundamental aspects, but we are going away from QT and heading into QE for the Fed, which means that they're going to take profits from mortgage-backed securities and bring them back into their own accounts, which will put downward pressure to the yields. I can't speak to that. I'm sorry, guys. I'm a little tired here. But what does that mean for me? Well, it means that we should see some form of risk-on scenario for this rest of the month. I'm going to be looking for a clean move to the upside. Now, will that move include pullbacks to the downside? I expect them. So I'm going to be ready for them, and I'm not going to be set on my expectations. Like, for example, we have a little bit of a weird economic news calendar this month. All right, I did mention it in my announcement in the Discord, but this week we have news almost every day, right? Except Tuesday, pretty much. And we have OPEC for the full week, which is going to be a little bit of a weird one for sure. But what do we see? What do our chart tell us? Well, we're trading down into this fair value gap. Well, this is all I need to know to predict the rest of my week. We respect this today, I'm going to be looking for this move. We disrespect it today, I'm going to be looking for retracement. That will perhaps lead us to previous month low, but that's going way too far ahead of ourselves, right? What I'm looking for specifically is price to consolidate within 2 levels and then form some form of low near the second or third week of December and then go into our end of the year run, right? As I've seen for the last 3 years. Basically, if you want to know what's going to happen in December, just look at the last 3 years. It's been the same exact thing every single time. So I'm going to be looking specifically at that. And let me check, actually. I didn't have the chat open. You guys don't have any questions for now. I also wanted to mention, I was looking into this since that we now have the update to have access to statistical analysis, right, of breaker blocks. And that also works for our higher time frame. And you'll notice that we just formed a bullish breaker block and the unicorn as well, right? It's kind of weird for me to see this on a daily time frame because I've never focused on using daily breaker blocks, right? I never use breaker blocks outside of my 1 minute chart because that's the entry pattern that I use to trade, right? But I can use these things and understand, for example, if I can put it in bullish mode, I know that we've analyzed 347 daily bullish breaker blocks. And I have the statistical reference of these specific levels. And if here, let's actually bring them on our chart. Where are you? There they are. And let's say we draw them. Now you can see -1 aligns with previous month low. So understand 10% chance of reaching this since we just formed a bullish breaker here. And then I can see that my +1 here and here, let's go even further and just make a level. I'm just going to add 1.5 here so we can see basically near previous month's high, but more specifically what is currently all-time highs. There's a 60% chance we reach them since making this breaker. So it's by combining all these statistics that I can get a better idea. I understand that the likelihood of reaching this high based on our statistics is 57%. But I also see that now that we've created a bullish breaker, I have additional reasons to believe that this upside move is going to happen next. So yes, applying different statistics, some people would tell you it is overfit. And in some cases, that can be very true, right? It's not because I'm adding 360% stats together that all of a sudden that is absolutely going to happen. But when multiple signals tell me the same thing, this is where I believe there is the true edge in statistics in these markets, especially for longer term analysis, where we are looking at the next 2 to 3 weeks, the next month, rather than just looking at the next 2 or 2 trading days, as we do as intraday traders. Sometimes it's even just considering the next 15 minutes, right? So applying this logic to the higher time frame and then doing the same on the lower time frames is exactly how I trade on any given day. So I just thought it was a cool mention and a cool way to showcase the new update, to just showcase these, because I mean I was studying a little bit, and definitely was a very fun one to look into. Do we have any questions? Right, these outlooks are always super short, super simple. They are straight to the point. But I have my levels for the month, right? Every single important level, I'm going to expect a pullback from it. I'm going to look for price to hold this, right? This inversion fair value gap. If we are going to be bullish, we are going to respect this below. We are going to push through this level, and then this will be my invalidation level for longs, right? If you guys were looking for more specific levels, I cannot be more specific than that. I'm not seeing anyone type, so I'm guessing it was all clear. I'm going to give you guys another second if you have questions, but if not, that's going to be it. I'm going to be trading a lot this week, so very clear. Thanks. Awesome. Awesome, awesome, awesome. So yeah, as I explained also, I think it's worth mentioning. I did say it in the announcement, but I'm going to be looking to trade almost every day this month. My year is done on my personal accounts, everything like that, but I do think there's still some upside to trading in the markets right now, but I don't want it to ruin my vibe for the year. Let's just say it like that. So I'm going to be half risk, but I'm going to be looking for a lot more opportunities, looking to have some fun to closing out the year, but mainly just I don't want to miss out on any potential end of the year rally on indices. It has been very consistent since I've started trading, so definitely going to be looking to profit off of that, but not at the detriment of my yearly curve. So half risk everything, looking to trade every day, clear frameworks with time-based manipulation at news. And if we don't have any news within our sessions, then that time comes at session opens, right? 9:30, 1:30, 2 p.m., 10 a.m. Those are the specific times. Always looking at the same thing. Time-based manipulation with a statistical range or opening price target. That is my whole entire model. Hopefully we go higher. I believe that tricks. You guys have a great night. We're going to call it here. Perhaps we'll have some price action reviews, especially if I see a day that is definitely worth talking about. You guys know it's going to be last minute. So be on the lookout for that this week. But for tonight, that will be all. Good luck trading this week. You guys have a great time. I will be in chat the whole week, so don't be scared at tagging me. Bye, guys. Have a great night.